Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly change for May 27th to the 31st, 2019. So if you are brand new to the channel, I do cover the stock market, dividends, real estate, personal finance. In these videos, I go over last week's changes. We go over this week's 4 main indexes. We take a look at the entire S&P 500 changes for the week, what stocks went up, what stocks went down, were any sectors out there positive. We'll also look at financials, home builders, semiconductors, oil, which was slammed this week, silver, gold, and mortgage rates. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button, and let's go ahead and get into the video. So last week we were red. We've been red now 4 weeks in a row across all indexes, and the Dow Jones has actually been negative for the past 6 weeks, which we'll go over here in just a minute. The S&P 500 last week sold off 1.17, the Dow Jones down 0.69, the Nasdaq down 2.29, and my portfolio was down 1.73. Now, if you head over to the Instagram page, it's in the description below. I post every single week. I post the weekly changes here so you can see this week's changes. But we can see here that this week we were negative. Last week we were negative. The week before that we were negative. Week before that we were negative. And I started posting the dates here. So here, I wasn't doing this before. This was back in April. I changed it up. I started putting the month and the date. So April 29th through May 3rd. And April 22nd through the 26th, we started to see that Dow go negative. Dow down 0.06, Dow down 0.14 over here, and just continue to go, softer and softer. Everything down 2 or 3% there. The very first week of May, the actual full week of May there, and then just continue to sell off into the remainder of May. A lot of investors are looking at this last week of May as possibly a point where we may recover some of the losses for the month, but we came out, we're not going to be making a trade deal. President Trump came out saying that, we don't need to make a deal right now with China. And then on Thursday, he came out saying that we're going to be imposing tariffs on Mexico. So I don't see any sort of bounce higher or, a dead cat. When you throw it down, it still bounces. So a lot of investors are looking for a dead cat bounce. I forgot what the whole terminology is, but we may not see that here in the short term. We may have a few more weeks of negativity and negative here in the market. So we shall see how that all plays out. Again, if you guys aren't subbed or follow me over on Instagram, follow me at Financial Investor 101. Now this week, we already sort of saw it here for the 5-day change. The S&P down 2.62%. Year to date, we're down at 9.78. Dow Jones down 3.01%. That's a massive hit there. Yep, 3.01. Okay, I had that correct. Yeah, massive hit to the Dow Jones after 6 weeks. This is its 6th week of being in the negative. This is a massive loss here, 3%. The Nasdaq down 2.41, and the Russell 2000 down a big 3.21%. So all the indexes, there's your average for the year, about that 7 to 9%. That's what you're currently looking at. But of course, this is an average over 100 years. You'll get that 7 to 10%. Anyway, stock futures currently looking about flat. We may see, continuing downtrend here into the future, but who knows? Nothing is certain. President Trump could come out with China saying, hey, we've done a deal, and the markets may pop up higher to that. President Trump has been wanting rate cuts. This is all planned in the back of his mind. He has been planning this for a while. He's probably been planning to not go with a trade deal with China until he gets the perfect deal that is that's benefiting the Americans, the United States the best versus the over in China. And he's not going to settle. Yes, it's going to hurt. That's why he wants quantitative easing. That is why he wants rate cuts. Well, the Fed were not giving rate cuts because, we saw the economy moving higher. We saw job numbers, job numbers were good. Overall market was moving higher. GDP was good. But in the back of his mind, he knew what he was playing. He was going to prolong the trade war. He was going to do subsidiaries with the farmers and such, and that's why he wants these rate cuts, because he thinks it's going to take much longer than it is, and they're already priced in at about 2-3 rate cuts by 2022. We may see one here at the very end of November, and maybe an additional one every year until this whole sort of resolves. That's why I would not personally be buying financials myself. Anything that may be hit by rate cuts, you may see your high yield savings accounts drop. You may see mortgage rates drop, which will benefit real estate investment trusts. So if you're looking for any REITs out there, this could be beneficial for them. Hence, kind of going forward, just my opinion. But some of the most active stocks in the after hours, Pfizer basically flat. Apple continuing to sell off. Here is at 174.88. A lot of investors were seeing support at 178, but as soon as it broke with that tariff news, Apple just lost its support. It was hanging at support at 178, lost it. We're seeing support around 173, 174, but if this falls, Apple will fall into that $166 range. A lot of investors in my Facebook groups, over in my Discord channels, they're discussing Apple at 146, I believe, or 148. I have it somewhere where I would like to buy. If I could get it at 146, that would be amazing. But we shall see how that all plays out. Now, S&P 500 on Friday, all sectors here outside of utilities and real estate investment trusts were positive. ESS Property Trust, that's a multifamily. This is one of my properties. Full disclosure, I do own ESS. I'm going to be picking up a few other real estate investment trusts. I am going to be focusing on building up a couple utilities and real estate investment trust positions from where they're currently at. The 1 week performance here, all sectors across the board, even real estate investment trusts. Let's see if I can get these to come down. It doesn't really show me very well. Even if I kind of click it and drag, nope, doesn't show me. So anyways, you can see that every sector out there had some red in it. Now, some of the biggest stocks that were slammed were, of course, oil. Oil got slammed down 6 to 7%, 9% here on Halliburton Company. You're going to see the ETF here. We'll share it in just a second. But Verizon and AT&T sold off nearly 5 to 8%. Apple down another 2.5%. Bank of America down 4.18%. Utilities even got hit this week. So just lots of red out there. There's so much red, and this may continue to go on here into the future. So financials down 3.16 overall for the week. Semiconductors down 0.71. This is kind of interesting. It's not so much the semiconductors. The semiconductors have actually already fallen pretty hard this month. We can see here down 15.31% in a month. That's basically been affecting the NASDAQ. But here we have a continued sell-off in the NASDAQ, and that's just everything else following the semiconductors now into the downtrend. So we could see, we already saw semiconductors sell off by 15%. Now other stocks are following suit and beginning to kind of sell off even lower. Home builders down 3.55. Oil down for the week, massive. I'm going to go ahead and pause it. I'm not going to read through these, but I will go down right here to this portion from Tuesday. If you guys want to pause it, read forward, you'll kind of see what the news is that took place. The U.S. trade war, economic downturn, barrel dropping down into that $55.92 area, and oil was slammed. Look at this huge loss here, down 9.24% here for the week. Now, the dollar climbed higher slightly. We started the week at 97.57. We ended the week here at 97.61. So a slight increase here. Now, silver, of the two materials here, silver and gold that I follow, silver basically flat for the week, but negative by 0.15. Gold was actually positive this week, up 1.67%. Another ticker symbol for gold, if you guys want to check gold out, is BAR, B-A-R. Let's see if this one loads up. There it is, 1.64 for this one. This was one that a lot of investors recommend because it has a lower expense ratio than ticker symbol GLD. So if you're looking at trying to invest in some gold, check out GLD or BAR for those gold ETFs. And mortgage rates fell by 7 basis points this week, going from a 4.27% rate last week to now 4.2. And imagine if rate cuts come in November and continue to fall into the following years, we may see mortgage rates back down into that 3% range. That's going to really benefit those real estate investment trusts that are out there that have mortgages, the mortgage style real estate investment trust. I see a lot of financial investors. I see a lot of investors in the Facebook groups bringing those up specifically. So I'm looking into those as well. I'm looking at that specific area. I did make a few buys. So as we kind of swipe through Facebook here, we did see futures going positive on Monday after President Trump's coming out saying, hey, we are not ready to make a trade deal. We are going to hold off. And this is all. I don't believe President Trump really wanted a trade deal. I think it was in his plan that we already have the markets so almost near highs before this whole sort of trade deal was coming to a close. I believe he wanted to prolong it, really get the best deal that he could possible, and he really wants to get the Fed to do quantitative easing. So I think this is all in the works, and it's all sort of like a plan. So Monday buys, I went out there, added equity into the markets. I added $118.50 into the markets. I bought up some Chevron, which got slammed this week, down some 3%. We can check it out really quick if we want to, but probably not. Kellogg's, I added $61.99 into that company, so I bought a complete share of Kellogg's and about a half a share there of Chevron. I did get paid out some dividends. Caterpillar paid me out a whopping $3.12. I will be doing my monthly recap of how much dividends I received here and what my actual portfolio change was for the month of May. I can tell you it was slammed pretty hard. Now, outside of my stock market investing, my primary focus of investing is my real estate business and my YouTube business. Those take higher priority than my stock market investing. Stock market investing right now, it's great to be it's great to be a stock market investor over the long term. That's how you build wealth over the long term. You invest your capital over the long term. You're going to get the average 7 to 10% minus 3% for inflation, so about 7%. But that takes years of just building up, and that's that long process of building wealth. And it does happen if you were to continue with that path. But my path, I want that financial independence, that financial freedom faster. So my focus is building up my real estate business and my YouTube business, my websites, my focus, and sort of out there. So I did make a video going over my second real estate investment property, how I'm now making a 49% cash on cash return. So that is out there and available here on the channel if you guys want to check that out. Here's the little snippet I put together for Thursday. So President Trump came out on June 10th. The United States will impose a 5% tariff on all goods coming in from our country from Mexico. So that is going to come in. So here I just put that Leroy Jenkins, just anything he wants to say on Twitter. That affects the markets huge. Here's my video going over how I made over $22,000 of equity within my second property. That means basically $22,000 to my overall wealth. What's it called? Net assets, whatever it's called. I forgot what it's called right now. But basically 22,000 on top of whatever I already have. And here towards the end of the week, money going up in flames. I saw a lot of investors out there on the YouTube channels. Hey, it's great. We're long-term investors. The way I look at it, I'm 34 myself. I have nearly 26 years to go until 60. That is 26 years of volatility. The market's coming down right now 10, 20, 30%. That makes my dollar much stronger buying into these companies now versus when I'm 50, 55, closer to 60. I would care about the stock price at that point. Right now, if stocks go down and I'm losing equity in these positions, equity in the short term does not matter because guess what? I'm still buying those same companies. Those companies that I'm buying right now, Apple, 3M, and the many others, Chevron and such, those companies, if I look in the next 5, 10, 15 years, do I see those companies going out of business? No, not in the short term anyways. Maybe in the long term, but that we'll take a look at that when that happens. But here in the short term, if these companies tank 5, 10%, that's completely fine. With time, in the next several years, they will recover. They'll also pay out a dividend. And in the next 26 years, where they're at right now, negative will not matter. If you look 10 years ago, you look at stock prices when it was dipping, you wish you had bought 10 years ago, but you're not buying 10 years ago, you're buying now. 10 years from now, you're going to wish you had bought right now. So Doesn't matter what the stock market is doing, if it's going positive, it's going negative. Primarily negative, you want to see that value. If you're already bought into a stock and you see it go red, that means that you're getting a better discount, you're getting a better value than where you initially purchased it at. So that's my whole sort of thought process there. So there is everything. I'm down 1.54% this week. I did take some profits on some of my portfolios, and I did slow the downfall of my portfolio here in the short term, as I do look for a few entry positions here in the near term. So that is primarily all I wanted to cover in today's video. So let me know in the comment section below, what are you doing with your portfolios right now? Are you taking profits on any of your stocks? Are you waiting it out, holding tough? Now my M1 Finance portfolio, I haven't sold anything on that portfolio. I don't plan on selling anything on my M1 Finance portfolio, but I did take profits elsewhere. So that is basically it for today's video. If you have not yet subscribed, hit that subscribe button below. I again cover the stock market, dividends, real estate, personal finance. If you did enjoy this video, find it helpful, hit that thumbs up. And if you have any comments yourself, anything at all, I do appreciate all your feedback. I do appreciate all your comments. I love reading comments and replying. So drop it below, and I will see you next time. Have a great day. Bye.